Amazon stock reports earnings today, February 1st, after the market closes. And so in this video, we will be analyzing 3 sets of unusual options activity data on 3 separate days, including today, that just happened a few minutes ago, and then showing how we are trading Amazon based on this data. If you've been following this channel, you know that the data represents the trades of wealthy investors and possibly insiders. So we want to find out, are they bullish or bearish on Amazon for earnings, so we can also trade in the same direction, whether it's up or down, so that we can make money just like the rich are getting richer every day on Wall Street. Now, to make things a little more interesting, we will be giving away a free month of our membership, which costs $100 a month, to whoever comments below with the closest price that Amazon ends up after earnings tomorrow morning when the market opens at 9:30. So make sure to comment below on what you think the price will be on Amazon for earnings tomorrow morning. So without further ado, let's get to the data as usual. For today, just a few minutes ago, 11:15 a.m., we have these September 2024s, 135 strike puts, 210 strike calls. Okay, 2,250. So what does this mean? This is the most significant data that we are seeing currently at this time at 11:38. There could be more later on, but we are making this video now so that people do not have to wait till the last hour, because we know a lot of our subscribers are asking for this video. So that's why you want to keep that in mind. All right, so today's data currently, these 135 strike puts and 210 strike calls. Okay, so this is for the Septembers. And when we take a look at the chain here, we can see that the 135 is over here, and then the 210 is over here. Okay, now if you've been following the channel, you also know that the open interest is greater than the volume. Okay, so there is a chance that these are closing trades and not necessarily opening trades. You can see here also on the put side as well. Now, we were analyzing other sets of data as well, variables. There is a higher chance though that these are opening trades, okay, where we believe they are selling the 135 strike puts and buying the 210 strike calls. And as you can see here, this trade is a bullish long trade with a positive 36 delta. Okay, now keep in mind, they are hedged to the downside. You can see that the blue line is pretty much flat here, meaning they will not be at a loss at expiration all the way till 132. You have Amazon trades. As long as Amazon is above 132 at expiration of September 20, this trade will be at a no loss. So they are hedged to the downside. So keep that in mind, and that is why earnings is still risky. Okay, so moving on to our second set of data. This happened on January 30th. Okay, so January 30th, you can see the date right here. This is where Amazon was trading at 159. On that day, it closed at 159. So on this day, for the February 9th expiration cycle, we had detected these 14,000 contracts for the 172.5 strike calls. These are clearly opening because you can see the open interest is only 774. Same on these 14,000 as well. at the 177.5 strike calls. And so what is this type of trade? Let's analyze it. Okay, so that was February 9th, a week from today. And that was the 172. Okay, so notice here, the open interest of those 14,000 are here now. Same on the 177. Okay. So 172, they bought this strike and they sold the 177.5. So this is what their trade looks like. This is a vertical call spread, which is also bullish with a positive 6 delta currently. Okay, but as long as it's positive delta, we know that this is a bullish long trade. Okay, you can see here as Amazon moves up in price, this is profitable. If it moves down, it is a loss. Okay, now moving on to our last set of data. This happened on January 24. Last but not least, this one was a rather large trade. Okay, for this date, Amazon was at 156. For the Junes, we detected at the 190 strike calls. You can see here, we have clearly opening trades, 27,000 volume. Open interest was only 2,800, and the 200 strike calls, 27,000. There's only 13,000 open interest. Okay, so when we analyze this trade for this June, all the way to the 190 strike calls, I believe they were buying these 190 strike calls and selling the 200 strike calls. And when you analyze this trade, you can see that this is also a vertical call spread that is bullish with a positive delta again. Okay, now for this trade, there is less open interest on this now. Okay, 21,000. Keep that in mind because that is some closing trades that have happened since January 24. Okay, so there is additional risk with this trade that needs to be factored in. That's what we do in our statistical modeling when we analyze a lot of this data to develop the best strategy. All right, so our strategy for earnings is we pick the February 1st, which is expiring just tomorrow, because this is just purely an earnings trade. And you can see here where we sold our 170 strike calls. We bought the 172.5 and the 165. Okay, so these are three sets of data or options where we sold two of the 170s and we bought the 172.5 and the 165. And when you analyze this trade, you can see that our option strategy is a butterfly trade right here. It costs about $80 per trade. And you can see it's clearly a bullish trade where we are risking 80 per trade. We have a positive delta since we are going long based on the data that we had analyzed of what the wealthy investors were doing. Okay, and you can see that this trade can potentially make more than 200% since the gain is 170 per trade. But again, this is an earnings trade, so it's very risky. And so we position size and decide how much we want to risk depending on how much contracts we want to buy, because we know exactly how much we could potentially lose by multiplying our position with the cost of the trade here. For example, this would be $800 of risk here, okay? But potentially could make $1,700. Or if we get near the $170 level at peak profit here, can actually make a lot more, 4,000, okay? So that is how we are trading Amazon for earnings. Again, it's a risky trade because it is earnings and anything can happen. If you do not like the risk involved with earnings, then make sure to check out our website where we share exclusive videos and content on the stocks that have this type of analyses, where we share wealthy traders or insiders buying different stocks, selling different stocks for whatever reason, but not during earnings, because we don't want that risk. So go to our website to learn more on how you can access that type of data. As usual, please smash the like button. Remember to comment below if you want to participate in our free month giveaway. And good luck, everyone. Take care.